Hello and welcome to the Morningstar series, Why Should I Invest With You? I'm Emma Wall and I'm joined today by Alex Ross, manager of the Premier Pan-European Property Share Fund. Hi Alex.
Hi Emma.
So, property's been in the headlines over the last couple of months, property funds, because some bricks and mortar funds were forced to close their doors to new trades, to new money and indeed to redemptions following Brexit concerns. Now, your fund's slightly different. It's property equities, property shares. But is Brexit still a concern for you?
Yes, so obviously Brexit's had an impact on the real estate market, as you say, with various issues with the open-ended funds. But one of the benefits we have of investing in real estate securities is liquidity. And whereas we're quite a volatile fund in terms of we have a high correlation to equities, we do have good levels of liquidity by investing in companies that are listed on the stock market, which are therefore reasonably liquid.
And is there any contagion risk there? People see property and they get scared, or, as you say, because it's an equity fund, actually you're a little bit removed from that?
Yeah, certainly we had a knee-jerk reaction on the real estate securities market post-Brexit. So we saw a lot of weakness in listed property companies, and I think there's some justification in some of the weakness in terms of, I think there's areas of the property market which have been fundamentally negatively impacted by Brexit in terms of sentiment on, for example, London offices. There's uncertainty about the plans of that tenant market, and also the potential supply of buildings come online in London. But we think ultimately the fundamentals of real estate should come through. And the key fundamental attraction today of real estate is really why you should be looking at property in the first place would be for its income yield. And we think the income yield on real estate today on a relative basis is attractive.
And of course, income is incredibly hard to find in this market where bond yields are being squeezed ever more. Of course, the other thing about your fund is it is European. It's not just exposed to that UK property market. Are you seeing greater opportunities then in that European section? Yeah,
so we've seen a very different market in Europe in recent months. So whereas the UK has been clearly negatively impacted in terms of sentiment post-Brexit, and on the continent probably almost been a slight beneficiary of what's happening in Brexit in terms of what's happening on the continent is the yields available to investors on alternative asset classes, such as, for example, bonds, have reduced significantly. And what that's ultimately done is reflected the attraction of alternative bond-like income. And we think the bond-like income you can get from well-let real estate in areas like Germany, in France, in Sweden, for example, we think that income is increasingly attractive relative to what is available to, for example, institutional investors elsewhere.
And how sustainable is that yield? Because there's a lot of pressure on other equity income stocks about how sustainable the yield is, just simply because equity prices have come down. But I suppose with property, you do get a bit of visibility about that income stream.
Yeah, I think that's a very valid point. So one of the key things we're looking for, there's a reason why bond yields are low and why there's very low inflation. It's because there's weak economic growth. And therefore, you have to really look carefully at the strength of the income stream and how sustainable that income stream is. So what we're trying to focus on is those areas of the property market, and commercial property mainly, but also residential, in, for example, Germany, is where you have sustainable income. And what we mean by sustainable income is where there's property that's well let to good quality tenants and where those rents are also affordable. And we think that where that income is at least sustainable, we think there's a reasonable outlook in terms of the attraction of that yield.
Alex, thank you very much.
Thank you.
This is Emma Wall from Morningstar. Thank you for watching.